This is tape number 3. Brian Plain will have tape number 1. The last tape will be tape number 2. This is tape number 3. It'll be a series of tapes on how to master the wholesale entry, both buying the equity and buying the call. And basically, I took their orders down. We're going to let the stock bounce. One thing that we're going to teach you here is that I took their orders down. It was 114 and a quarter. I'm going to reevaluate that entry now that on the 3-minute chart, I'm going to look at my 60-minute chart. And right here at my 60-minute chart, I'm going to take a look at where the price would be at a double bottom on a 60-minute. And basically, I'm going to let them buy the equity at 114.10 pennies. And that's going to be slightly at a double bottom entry. Go ahead and put your orders back up to 114.10. I have taken the limit order down. This is 30 years of master trading at experience, understanding the ins and outs of market makers and markets, the psychology, the buyer, the seller. Buyers are getting shaken down out of the equity. And I will be buying that. So go ahead and put that order at 114.10 now, everybody. And keep the option hit, and we're going to find out where the low is. It hit $4.15, and they bounced because now the equity is bouncing off the low. But just remember, each bounce was short covering. For the intraday short seller, took profits. They bounced the stock. Once the shorts are out, took a profit, then it rolls back over. Now we're going to see where we put in a low. Whether it's $1 higher or 60 or 70 pennies, and we'll start adjusting the entry to the trade. Some of the more experienced traders that have been around here are taking the ins and the outs, only because it's not like they've been here a couple of months. They've been here for a number of years. And they've gotten to a point where this is a 60-minute chart. We can see that there's a buy tail here. I'm going to draw a horizontal trend line. That means that that low that we put in on a 60-minute is starting to hold. But remember, we have a 60-minute sell signal. We have a 3-minute sell signal in play. This is what the 3-minute bounce. Now, just like I told people yesterday, the 10-minute period moving average is going to flatten out. All right, put your orders out at 114.50 now. Change the order to 114.50. Basically, we're going to tell people that as a 10-minute period moving average flattens out. It's no longer going down. It's going flat, and it's starting to turn up. I'm going to give orders now at 115.10. which is right above this bar right here. I'm going to draw a trend line. Put your limit orders out there. Put the option out to buy right now. Change the option back to 4.20. Just do 3 contracts so that we could cost average the wholesale price. So we could buy 370 we could buy 420 and 370 and still be wholesale there. So basically, as we set a bottom up in an equity, we're going to teach the new people how to use our mathematical formula related to these minute period moving averages, the RSI, not complicated, and this MACD. That's it. That's it as far as the intraday level goes. And it's going to work fine. Now, we're going to see here, I gave orders out. Amazon is struggling with a 10-minute period moving average that's slightly declining. When it started to fall below here, I changed the trader's entry. I gave trader entry 115.10 with the stop at 115.01. However, the risk is that instead, is that the 10 minutes not flat, because it's not, even though that we're trying to put a bottom in. See, the blue line here is still descending. So because of that, and now we're falling through it. So that's the candle before. That's the failure again. And Bridget's order is 114.50, and her stop is 114.39. And that stop market order is a penny below the intraday swing low. what we did here was that the 10 minutes been violated. She was given a new order to buy at 114.50 because we started to descend on a 3-minute declining minute period moving average, which is equal to the weakening of the trend. The bounce is not there because of that. That's number one. Number two, it will have to change sometime today before we will have a power bounce off of the swing low, just as we did yesterday. And the level two, it's going to come down to her 114.50. And this is where we decided to put that. She does have a tight stop. I'm going to let that's 10, but she's buying it 10 cents off of the low. It's not like she bought it at 117 or 116.50 or 115.50, let alone 118. She's working with it there. And she is using her skills that she has learned in the pro trading school to understand that when we violated that area, we have to adjust our entry. All right. When we were up here in the trend, I told people that we would see if we would come down and hold a double bottom, that we couldn't buy up here. The 10-minute period got violated. We dropped our orders down. That's called making a risk management adjustment to the intraday entry of your trade. Working and mastering our other little indicators that we use, you will be able to do that in the pro trading school. Not only that, the characteristics, the behavior patterns, the emotional state between the buyer and the seller, and the trend momentum, you will be able to be a master. And we haven't taken the trade. It took us yesterday about 3 hours, I think, to get the entry on Amazon. But once we got it down there, we bounced $4 off the low. And today, folks, it's just another day of doing business. And we're going to have to go through and you're going to master all of these characteristics and behaviors that happen on getting that low entry. There's a behavior pattern. Things will get stronger on the bottom. Well, we're going to confirm the bottom.